Financial inclusion has received tremendous attention in India. Every policymaker, before launching a policy, is considering whether financial inclusion will be impacted or encouraged with the policy launch, or the policy is not going to impact financial inclusion. But why this is happening? This is happening because every policymaker now understands that an efficient financial system can lead to better allocation of resources, which means overall economic development. And that is what India is actually after. Financial inclusion has been the priority for developing world countries always. And for India, the major boost for financial inclusion came up when we launched Pradhan Mantri Jan Dhan Yojana in 2014. Since then, the number states we have done extremely well when it comes to financial inclusion. But wait, whether the numbers have been inflated or not, whether we are looking at right numbers or not, this is something we're going to deep dive today. So welcome back to our channel, guys. India has been working on financial inclusion since 1969. This all started with the nationalization of the banks. Following that, the country set up regional rural banks, introduced mandatory priority sector lending, lead bank scheme, no frill account. Also, it linked social help group to banks, bought Kisan credit cards, and doorstep delivery of financial services via approved banking. But the major boost came in 2014 only when Pradhan Mantri Jan Dhan Yojana was launched. However, how much successful India has been with financial inclusion, we will figure that out in this video. So, what does financial inclusion means? Financial inclusion means providing access to financial services to the marginalized section of the society. Now, when we see the supply side information related to financial inclusion to derive some numbers, we can see almost all marginalized section of the society people have bank accounts. That means we have a good financial system since everyone is using banking service. Well, the answer to this question is no. Here is the big thing. In economics, we not only study supply side information, but we also use demand side information. So, when I study supply side information, I will only consider how many people have bank accounts, how many bank branches are there in the rural areas or areas where actually marginalized section of the society lives. But when I come to demand side information, I will actually study how many people are borrowing and lending via formal means. How many people are actually using their bank account. And those numbers which comes from demand side information are going to give a better picture related to financial inclusion rather than looking at supply side information. So, the idea of using demand side information to find out financial inclusion actual numbers came with the research done by Jyoti Prasad Mukhopadhya in 2021. And he found that there is a significant difference between the ranking of the state done on the basis of demand side information and supply side information, which means the state's ranking actually changes when it comes to financial inclusion when we use supply side information. So, a researcher, Jyoti Prasad Mukhopadhya, actually used demand side approach to rank Indian states based on their financial inclusion. And he found the ranking significantly changes when we use supply side information and when we use demand side information, which means multiple people probably have the bank accounts, or most of the people are actually not using their bank accounts which they opened under Pradhan Mantri Jan Dhan Yojana. So yes, it means we were looking at wrong numbers. And as per the research, Goa has done best when it comes to financial inclusion, while states like Odisha, Bihar, and northeastern states have not performed good. And it is important that they learn their lessons from Goa's experience. Now, it is more worrisome when I say that states like Bihar, Odisha, or northeastern states have not actually done when it comes to financial inclusion, because these states are already low income states. It means that financial inclusion has not reached to rural areas in India. Now, there is more interesting fact coming out of this research. In places like Uttar Pradesh, Himachal Pradesh, and Uttarakhand, people like to keep their hard earned money into chit funds, or they just keep their savings into their home instead of banks. The question arises, how can India encourage demand for more financial services? The best way to do is to impart more financial education. The higher financial literacy rate in the country will be, the higher the demand for financial services will come up. To do this, financial literacy centers can be established which impart more financial education to the section of the society which needs it. Now, how policymakers will make a policy to bridge the gap between access to financial service and the usage, we will see in the upcoming days. But here we wish the best for the India and its people. Jai Hind.